Happy Thursday morning to you. We'd like to welcome you to Trader Talks in today's markets. My name is James Boyd. Alongside with me, our good Canadian friend, Barbara Armstrong. Say hello, Barbara. And a little fun there with Barbara. I got it. Okay. Good thing about Barb is she'll always push back. Boy, will she ever. All right, Greg, hello to you. Kay Brown, we welcome you. Cecil, we welcome you. Sam, Kevin, Richard, Vic, and many others. Hello, Pia. Now, just real quick as we get started, today's date, April 16th. And there on the slide, you'll see our handles on X. We do post educational content there daily. Check that out. Now, just real quick as we hop into the markets, quick reminder that the information we talk about is done for general informational purposes only. When we talk about specific securities, which you might have questions about some, if you do, what are some of the questions? Type those in. Just know that if some of the securities I talk about, we're going to demonstrate analysis and trading functionality. Now, our examples come from the Dow 30, NASDAQ 100, S&P 100 most of the time, okay? Sometimes we'll look at S&P 500 stocks, but most of the time we're going to be looking at those three indexes. If we talk about options, remember that options carry a high level of risk and are not suitable for all investors. When we talk about our examples, we will be doing those on the Paper Money software application. When we talk about also examples, remember that investing involves risk, including loss of principal. And also when we talk about, let's say, any of the workshops we have upcoming, you'll notice on the left-hand side there, Boston, okay, April 17th, tomorrow and Saturday. And so that's going to be at the Westin Boston Seaport District. If you went to schwab.com/events, you're going to see those events go all the way out until the end of the year. Make sure you're aware of those. If you see a two-day format like Boston, that's a technical analysis the first day, second day option strategies. If you're in the Chicago area, May 16th, Renaissance Schaumburg, okay? That's a one-day event. They call it the Market Drive. And on the right-hand side, Santa Clara, the option strategies. We all learn different ways. We all kind of, some of us like to see live, some of us like to see online. Be honest, it's just good or best when you have a combination of all of it. Okay, you see it differently. So a heads up, if you're Schwab client, as you probably are, you can actually sign up for those. Check them out. Okay. Now, just real quick, we'll talk about some of the general trends in the market, and boy, has there ever been. We'll also talk about kind of some different time frames. Today, I want to kind of talk about not only price, but I also want to talk about volume. I've been watching the last couple of days the stock volume and the option volume. So that's going to be kind of a piggyback theme we talk about here today. Let's go ahead right now and just jump into the market. I have on here the SPX. Okay, so when you look at the SPX, this has been one hill of a move. Okay, hill of a move. This move has really been now sometimes when you get news that's not long lasting, the market can go back to like where it was, okay? And based on what we've actually been seeing kind of in the uh, kind of over in Iran, etc., this was not meant to really be like a Vietnam War per se, okay? Now you could say that, how does it turn out? But what you'll notice is some people sold off as prices fell, as there was things that was the market was not participating for. We understand that. And now what you're going to see is as they're trying to finish it, probably be an ongoing project, you're now going to see on the right-hand side, the market goes up like that didn't even happen. Yesterday, we closed above 7,000. Everyone, okay. And if you look at overnight, the /ES, you can see where those went to. Cash, though, here we are at 740, 70.40. We made mention on Tuesday, the likelihood of us actually going higher is higher because when you actually have a duration of time that is actually less than what it took to fall, it just increases the chance of a continuation. When you look at this, here we are on Thursday of the fourth day in the week. If we close here, this would be a moving average crossover on the weekly chart, okay? Now, some investors, they're trading off those or investing off those weekly charts, and you'll see that those are three big, fat candles on the SPX. Now, what does that probably say? It's setting up the pull. You get the pull, you get the flag. Then if you get the flag, could you get another pull? That's the idea. Now, one thing I want to kind of come back to just real quick is what's been interesting is the movement in the Nasdaq. The Nasdaq kind of led the market down, if you will. We cannot say the Nasdaq is dragging its feet. Neither can we actually say the SOX has been dragging its feet. If we said what was the canary in the coal mine, maybe saying something's different, the shooting up of to a brand new high of the SOX, that was really the difference maker to me. I mean, seeing it, you probably see right behind that crude oil going down, okay? But seeing the semiconductors smash or crash to the upside, it's been no joke, okay? Now, the one thing we got to say is some of those software names are trying to make a comeback. Keep an eye on those. Russell, if you take a look at that, could that be the third of four that actually take out the high? I think many bullish investors are thinking that it's probably extremely likely. The one thing you'll notice really on this chart is you kind of have like more of a cup-like pattern. If you see cups like a U pattern or a V pattern, think the word of the day is continuation. Now, how do you know that? You never know that. You take the calculated risk and you see how the trend plays out. Now, the one that has lagged, it's not everything is perfect. Now, you got to think about this. Someone said to me, like, James, I'll get in when everything's going up, okay? Now, think about how it sounds logical, but it's not completely logical. You go to a college class, and everyone in the class gets an A. Now, at that point, you got to ask, I mean, who's cheating? Is it the students or the teacher, okay? If everyone's getting an A in the class, there's not a real distribution, okay, of grades. No different in the stock market. Not everything typically is going to be going up. If it does, that is very, very, very unusual, okay? So if we take a look at this, is not everything is going up. They're going up in different percentages. The Dow is actually lagged. There's probably some good reasons for that, which I could get into. But it is just the Dow might be now trying to play the catch-up trade, okay? Now you got to also ask yourself, what is in the Dow that might have been dragging down the Dow? One of the main ones that have been going down is Nike. The other one has been Salesforce, among others, Microsoft. Those three have not helped the Dow at all, okay? Now, so the comment from Chris B is, are you concerned about the lower volume behind the price move? The answer is absolutely not, okay? When you go to the upside, now there's two comments here that actually get said. There's so much cash on the sideline. We've said that for the last 30 years, okay? We're not concerned about the cash that's on the sideline. We're concerned about the people, that are the investors that are actually trading the markets, okay? You ever notice the people that are always in cash tend to always be in cash, right? So I'm not counting the people off the sidelines. Could that be future volume? Yeah, it could be if they ever decide to get off the sideline, okay? So I'm not counting the people on the sideline. Counting actually what's happening in the market. Now, with that comment said, when the market moves to the upside, and this is why I want to kind of tag that, kind of add that volume piece. When you look at when you look at volume, and I'm just going to give example given. Let's go back to a couple of these. Let's first show a couple sectors first, and then I'm going to actually go to the stocks, and then we're going to tag that volume just real quick. If we look at a couple of these things, and so Chris, let's hold that comment for just a sec, but I'm on indexes right now, which means I can't pull up the volume, okay? Now, if you look at transports, what is transports? Now, transports, we could say transports industrials. That transports actually, again, there's no volume on this, okay? So, Chris, I'm coming, okay? Just hold on for just a sec. If you take a look at that, try to actually bounce back. You got cruise lines, you got airlines, etc. Now, we'll show some of those. Seeing the transports hit a high, is that a bearish sign? Probably not, and it's not. If you look at, let's say, the energy, which has been down, not much of a reversal yet, but it's been a nice fall down. We'll all take it. The base materials, not seeing a bounce back up. The keyword is yet, kind of more of an inside day. If you look at something that's kind of standing out a little bit more, communications, two big stocks in there, actually three. You got Netflix, you got Meta, and you got Google, okay? Boy, have they been ripping back up. Probably say Meta has been one of the stronger ones. If we take a look at, say, industrials, it's not as strong as the transports, which is kind of interesting. And if you look at, last but not least, financials, that is now, as of this morning, poked its way up through that resistance of 641. stocks like Citi, stocks like Morgan Stanley, among others, Bank of New York Mellon, they've been very strong. Okay, horses. Okay, now when you look at, let's say, the technology, of course you got to imagine that that probably is pretty strong, given that we just saw the Nasdaq. But when you look at these other areas like utilities, which is just lagged, you look at healthcare, which is lagged. You look at, let's say, staples that has lagged. I like to think of these as winter tires. I know, forgive me, okay? But when it's summer out, it's 90 degrees, or think of these utilities, staples, healthcare, like sweatshirts. Nobody typically wants to wear a sweatshirt when it's 90 degrees outside and they're hitting the technology, discretionaries, financials, energies, materials, those higher beta areas, discretionary, communications, and so on. These areas, staples, utilities, and healthcare, they're your winter clothing. They're your winter tires. So when it's hot outside, summertime, these tend to underperform. It's not to say that there's not a purpose for them. It's just that they're lagging. It's a sign that actually more investors might be pausing on some of these names right now and chasing those returns in the growth areas. And boy, have they ever been chasing. Now, speaking of volume, let's go just real quick to one of the areas that I want to bring up just real quick. And I'm going to bring up, let's kind of show the first example here. And one of them that I want to bring up just real quick is I'm going to bring up Apple real quick. Let's also bring up the volume, because Chris brought that up and he's been patiently waiting. Okay. Now, Chris, you've been so good. Okay. So here we go. Now, if you said, what do you like to look at? Stock volume or option volume? And the answer is yes. Okay. All right. Now, if I bring this up, the volume, let me add that. Okay. The volume, I'm going to look at, let's say, the default volume in this case. When we take a look at that, it's 50. Let's take that down to even something like 21 days. Okay. 30, obviously, we're talking about 6 weeks. 21 days, we're talking about 1 month-ish of trading. So when you take a look at this and we say, well, are you concerned about the volume? Well, a lot of people like to kind of use that yellow line as kind of the average, okay? Something that I've never agreed with is when you get a move to the upside, should you have explosive volume? And the answer is no, okay? Number one is, what matters the most? Is it the price move or is it the volume? Now, you need the volume to get the price move, okay? But you don't always need higher than average volume, okay? Because volume to me is secondary to price. I get it. We need volume to get the price. I get it. But we don't need above average volume to get the price to move, okay? Now, when you take a look at this, obviously we're looking at the volume now, which is lighter, but we're only 13 minutes in. So it's hard to kind of see that. But if we look at the move on Apple, we would just say, look, it was slightly above average yesterday. Now, I'll tell you what some investors like to look at is they like to look and see the option volume, okay? Not everyone is going to trade the stock specifically. They might use the four-letter word speculation on calls or puts. Now, how can we see that? We look at the volume, we look at the open interest. When I go back to this trade tab, let's go back to analyze for just a second, and I'm going to go back to think back. When I go back to think back, what I'm going to do is, now why are you doing think back? Well, I want to go back to where we were, like, let's say yesterday, okay? And what I'm trying to do is, we saw the stock volume from yesterday, but this is really looking at the closing values, okay, as of yesterday. So I'm going to go, let's say, example given, let's say monthly options. And what I want to see out of this is, did we have any above average movements? Now I'm going to open this up to a couple more strikes. Let's go 12. What are we actually looking for? Now, what we know is when investors or traders get in, they probably don't get in all at one time, especially if they take the classes I teach, where we talk about ad nauseum dollar cost averaging. Oh, it's been so painful if people didn't listen to that. Now, here's the deal. We got open interest. That's the number of contracts that are open and unexercised, okay? So think of this as an existing pool. The volume, that's contracts that were bought or sold. You buy one contract, that counts for one. You sell one contract, that counts for two. Counts for one, which equals two. They're not netted off. So the volume is the activity, the contract count. Buying and selling one does not net each other to zero. They count for one each. In other words, the higher the volume, okay? So when you start seeing out of the money volume, when you think about this as a higher percentage of the open interest, that becomes as of interest. So example given, if we look at this and say, look, we had 19,000 on the contract yesterday, we got 28,000, quick eyeball, we're talking about 65% volume relative to the open interest. Now, what's interesting about this is this one actually had quite a bit. That's out of the money. This one was about 25%. That was about 20%. And you're going to see that was about 25%. But there was quite a bit of activity on the 260, 280s. Now, is it only on the call side? Not always, but I don't see anything over here that really stands out on the put side. So there were some activities here on the calls. Let me show you some just quick variants here. I think when you talk about, let's say, stock volume, option volume might tell you a little bit more as far as speculation. If I bring up a stock like Tesla, which exploded yesterday, okay? If you take a look at this, let me kind of show you a little bit more what we're talking about. Now, is it always going to be the case that the volume is 100% of open interest? No. Which ones kind of stood out? Now, again, we're thinking about the percentage. This one right here, well, the at the money, the 360, that was 50% of the open interest. That one right there was probably 90% of the open interest. This was over 100%, 30-ish%, 30-ish%-ish, 30-ish%-ish, and you got about 30-ish%-ish. But the ones that kind of really are high is the at the money strikes and the slightly out of the money strikes. Now, why does this matter? Well, because they probably don't put all their position in at one time. So if you're seeing movements in those percentages relative to the open interest, a trend is a trend. And a trend could actually get multiple entry signals over time. People think, I missed the entry or the crossover, but that's not the only entry, okay? You get a hold, you get a close higher gap, you get a fresh new breakout and so on. And those who got in could be adding to positions, okay? We always think that everyone just only has 100 shares of stock capital. That's not true, okay? All right, now, so first off, so Chris, when you're looking at an upside movement, I would count on that the volume is going to be lower than normal. The thing that I've always said, and I'll say here again, is when you're selling off, what is the volume? Well, when we sell off and we drop down in price, on the bottom, the volume is going to be higher. Why? Well, because things were selling off and people were getting out. When the price goes down, the volume goes up as people exit. Why do also people exit? Because they become nervous, scared, they get sell signals. The VIX is up, okay? When the VIX is up, people tend to sell more. When all of a sudden we get reversals, people are thinking, geez, I don't want to sell now. We get VIX down, okay, VIX down, and the opposite, in that case, when things are going back up, they say, yeah, geez, maybe I don't want to sell. Maybe, hey, now finally the trend is coming back kind of where I maybe want to kind of stay in. And that volume to me, as long as it's right around the average, that's just fine, okay? On the left scenario here, this is where people are panicking to some degree. And the panicking causes people to hit the sell button over and over and over and over and over again. But when that lake is just perfect glass water, people are not running to go to the boat dock or the boat ramp to actually get their boat off the water. They're like, man, this is the water's glass. I'm going to stay out of here and enjoy myself. Got a nice 12-ounce can of Diet Dr. Pepper, and I'm going to go for a little ride. So no, I don't expect volume to be better, okay? Just give me average. Take it. Now, you got to understand something. The average volume might be higher because of what's happened in the pullback. So that comparison of even averages, you're probably going to even be lower than average. Because if we did a volume of 21 days, part of that 21 days is a recent pullback. We got to actually consider that, okay? which people don't really say that when you look at the average volume in the last 21 days, that part of the 21 days was a pullback where the volume was higher. So now when it goes back up, the volume seems like it's coming short, but it's a comparison of two different, sell-off pressure, buying pressure. Okay? Not completely looking at the same thing, to be honest. Whenever you look at data, you got to say, is this data the same or are we talking about something different? One was a pullback, one was an up move. It's different. Okay? Now, all right, now if we take a look at this, let's kind of, so first off, any other examples, okay, or questions? Now, what I want to do is I want to bring up just real quick, just kind of, let's take a look at a couple stocks. So number one is, when I said that a couple of these software names, IBM, trying to get a pushback, these are some of the names that got pressed down. Microsoft trying to come back to the upside. Does Microsoft have a little bit higher volume per James's comment? Yeah, in the last 3 days it actually does. Now, do you want to just look at the stock volume or do you want to also look at the option volume? But yes, okay, go look at both. See if this move is being now taken to the derivative. Are they buying those calls, at the money, out of the money calls that is peppering this trend? Okay. Even stocks like Disney is trying to, well, it's actually had a decent move back. That's the one that's fallen a little short. But this is your classic example of what I'm saying. Hard selling on Disney. Hard. And as that price got pushed down, where did the volume go? The volume was higher. Now as it actually goes back up, notice that most of these days are hitting average volume at best. And that's an example of what we just said. Okay? Now, I want to go back to our first example. Let's go look at Cisco for just a moment, okay? Now, if we look at, let's say, Cisco, many investors kind of look at this example where you have, now let's kind of take this to a 3-year weekly chart, okay? If we look at a 3-year weekly chart, I think we can kind of look and see these lines a little clearer. Horizontally, probably right around 80. Diagonal support or so, we're probably talking right about not, if I went to, let's say yesterday, and I drew it back a little bit and said, where's the diagonal support touching the bodies of the candles? We could probably touch a lot of the bodies of the candles over the last couple months, something like that. Now, the other thing you'll notice is we had this big red candle right there, right around the 81 price level, trying to get above that. To this week, because we're looking at a weekly chart, we're bouncing off that 80-ish level. Now, let's start with a stock position for just a second. I don't want everyone to think it's just options, okay? Now, if we take a look at this, if we said, look, I want to try to get in, but I want to set a stop below that $80 price level, okay? So let me bring up Cisco, okay? Let's actually go back to our standard chart. Now, by the way, if you do not have this chart, please receive this as a gift, okay? So when you look at this, these are the package of charts that we look at all together. Here we are on the paid money count. We're going to right click on that chart. We're going to go down to buy custom with stop, with OCO bracket, excuse me. Now, trade number one, okay? If we look at the chart, that green dot is telling us that we're closing or trading above the high of the low day. We haven't closed, so this is trading above the high low day. Name or show me the most recent red candles. Well, the most recent red candle was yesterday. There was only one of them. What's the high of that day? Well, you can see the high. And if we're now trading above that high, that is why we get the green dot there. Now, some of the things we talked about yesterday was dollar cost averaging, maybe not putting on everything at one time. Someone might say, look, I'm going to try to get in here. But then second, I'm going to try to add in if we take out those highs, maybe like a buy stop or buy stop limit order. Noted, okay? In this time, what I'm going to do is I'm going to go back to the position and say, look, let's say we're going to do $4,000 if we could do that much. If I have capital left, which is always the problem to have, if I said $4,000, okay, it's going to be about 48 shares of stock. Target, we'll talk about in just a sec. Stop underneath us, we got about 79.89. So that's 79.89 less 2%, 78.29. So if I type in 78.29, stop day GTC. Okay, now what sector are we in? We're in technology. The technology, do we have a technology index? Yeah, it's the NASDAQ. So it's a NASDAQ. We're talking about something in the NASDAQ. We're talking about something that's also as well in the Dow, technology sector, and so on. Could this be also trying to get a bounce back? Now, it's not the only one, but if I actually put the target on it, if we did, the old target that we actually had, if we're talking about the body of the candle, 86.81. If you like to look at extremes, even though it was only up there for a stinking second, okay, which is an extreme, well, 88.14. Now, James Body to Body Boyd, okay, would look at this example and say $87, okay? We use the bodies because we get more statistical data at those points. We're not taking outliers and saying, oh yeah, that's the conclusion. That's not the conclusion. That is a data point that has a very, very low occurrence. We're trying to get more touches, okay, to see a pattern. I don't think people really think that through of what they're saying if they take lows and highs, okay? If we now go confirm and send, trade number one is buying shares of XC Cisco. Now, I want you to understand something. If we said, could we try to buy the shares of Cisco, but then do like a buy stop limit order? Yes, I talked about that yesterday, okay? I think we get it. But the biggest actually thing is here, I'm gonna buy that, target, stop. The stop is saying if we go to that price or less, trigger it to sell, it could be at a lower price, send. Now, when we actually go back to this market watch for just a second, let's go to the market watch. Let's go to visualize. I just want to kind of take a look at what's kind of getting a little move here. Anything that's actually getting a move. Well, there's this software, okay, which we talked about. Microsoft CRM, there's Cisco, there's IBM, okay? Amazon, which has had a fairly decent move. Could it go higher? Man, it's 300 in the cards, about ready to find out. Anything that's standing out. I don't think I see anything in the Dow standing out, but we're talking about an index that's trailed the others. If we look at the NASDAQ instead of something standing out of space, these white boxes, that's the sector, okay? The sector, okay? Consumer staples. Don't see anything there that's really getting a big light green color. The S&P 100, there's Oracle. Now, I want to talk about Oracle because we talk about price and we talk about volume. Let's come back to that in just a second. Some of these financials are also there. You got consumer staples. Some of those are starting to kind of light up a little bit. And if we look at the S&P 500 showing the whole thing, anything that really stands out. Well, by the way, I'll give you a hint, okay? Where's Waldo? But instead of where's Waldo, where's the other light green box? I'm close to it. Giving you a hint, okay? Well, Oracle's light green, but the other one that's also right there is yours truly, ding, 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 Dell. Now, some have a love-hate relationship. No comment. I'm not saying anything, okay? Now, let's just take a quick, we're going to look at Oracle first, and then we're going to look at Dell, okay? Now, if we pull this up, just let me see Dell, okay? Now, Dell, if you take a look at that, is kind of your classic upward trend line, trying to get a little bounce there, okay? So that's, if we look at that, is that showing the most recent lowest red candles? 1, 2, okay? So there's 2. Which one is the lowest? Yesterday. What's the high of that day? Well, yeah, we're trading above the high. That's why there's a green candle there. All right, now we'll come back to that in just a sec. Now, if we take a look at this, Oracle. Now, let's talk about the volume, okay? Now, I don't bring up volume all the time because it's not applicable in my mind every day. I mean, we just act like every day is supposed to have above average volume. But where we have seen volume that has looked, noticeable, has been on Oracle. It was on the 13th, it was on the 14th, and it was on the 15th. Now, this is sad to say, but it's kind of true. It wouldn't take a whole lot for you to know that Oracle has done some reduction in headcount. That is language of layoffs of employees. Now, what does that do to the income statement? Well, let's say revenues stay the same and you release some employees. Now, here's the truth. Some of those employees were brought on like seasonally, okay? Perhaps. They might have not had like a 20-year career or whatever. Some of them were to do a certain job. Understand. Now, that's not true of all of them probably, but the business might be saying, look, we're changing our business model. We're changing the AI a little bit, and we want to, instead of actually having headcount, we want to actually use technology that can maybe replace some of those jobs and so on. Okay, we get it. Okay. Now, if you take a look at this, the volume on Oracle, 15 million so far in the first 30 minutes, that average volume being 24. So if we talk about volume, that is really high compared to the average. Now, where else are we going to look at the volume? The option table. Now, let's look at the volume today. Now, when we look at the volume, we're going to go to the monthly options. Guess what we're going to do? Exactly what I showed you from looking at it yesterday. Are there any options that are actually kind of showing some abnormal moves? The keyword is so far. Now, James, do you look at the calls first or you look at the puts first? The answer is I look for the calls first. Why? Because I'm looking to see if people are buying those calls. Why do you buy calls? You want to have the right to buy those shares at the strike price. Okay? And it's also a secondary way of really buying the shares. Okay? Outside buying the stock. When I look at this percentage-wise, okay, anything standing out? No, not as much. This is okay, okay? That's 25%. This is high, okay? That's high. And you're looking at 4,400 contracts. And remember, this is the volume in the first 30 minutes. The open interest, this is over days to weeks. So someone's going all the way out here at 230. Why? Now, second, when we go now look at the put side, do we see anything that really stands out? The only thing that stands out in terms of thousands of contracts, the 140, the 9,400, with 9,400 contracts. Could that be people that are selling puts and so on? It could be, but I don't see anything that's really maybe huge. The keyword is yet. That doesn't mean throughout the day it can't change. But that 230 strike, the couple thousand contracts on the call side, number one, someone could buy the shares. Number two, they buy the call, which is the right to buy the shares from now until expiration. Now, let's go to this just real quick, okay? Now, all of us are a little bit different, aren't we? Okay, we're all special. That's the truth, right? If I went back to Oracle and I looked at this and I want to kind of play the game of where would you try to buy in? Or let me ask you the question first. Where was the old resistance? What would you say? Where was the old resistance? Now, whenever these companies are announcing layoffs, you got to think to yourself, what does that potentially do to the income statement? Well, it cuts cost. Well, if you cut costs and the revenue stays the same, the net income could be higher. The net income's higher. The earnings per share could be potentially higher. Investors like to hear that, okay? Now, if we said the old resistance, it was, I'm saying the old resistance. It's probably right around about 163, okay? If we took the very tippy tops, it's right around, let's say, 170-ish, the tops. Now, there was some touches there. Well, actually, a couple. Let me take that line a little farther back. It's about let me delete that line just real quick. Now, there are a couple tops, okay? Couple touches there. 170-ish. Now, number one, just like we talked about yesterday, if we actually are saying, look, 170 was the old breakout point. The second breakout point was 163. We know that those are areas. When we say areas, add 1 or 2%. So if I say what's 1% added on top of 170, it's probably right around 172-ish. Okay, close. 2% of that, 173-ish. So if I say, look, I'm going to try to buy on a maybe little move to the downside, I'm going to buy custom with OCO bracket. So we're going to set this up, okay? Now, what I'm going to do in this case is I'm going to say, and let's put this in the paper money account so we can track that. But what I'm going to do here is I'm going to say, look, if we could get in right around that 172, that's a buy limit order, okay? Buy custom with OCO bracket. Let's redraw that line so we can see that exactly. Now, here's the thing. As investors, we got to be more persistent, okay? Meaning that if we find some setups that we like, that we are persistently watching those on a daily basis. Don't give us this stuff that you're so busy. We got mobile, okay? If I just watch the amount of time that the average person, you should Google that. What's the average length of time someone spends daily on their phone? It's guaranteed solid 3 to 4 hours. We're not talking about 3 to 4 hours. Could we take 30 minutes? And for example, just look for some stocks we're trying to buy on a dip or rip. That's the idea. It's not that people don't have time. It's they're unfocused. Okay. So if we take a look at this 169, let's say that order that we're doing, we're just saying, look, if I can come down to that price, 1 or 2% from that 169 or 170 level, try to buy it at that price or less. Now, the comment that was made yesterday, which is fair, wonder if it doesn't come down to that point. Now, I'm going to do this in one of two ways. We already said 172.16. Wonder if it doesn't come down to this. And I'm going to tell you this is a mistake. Okay, Oracle, method, mark, less or equal to 172.16. We're always thinking, you can almost say in a way that some of us are cheap. Okay, we've been so programmed to buy low, but the good stuff in life doesn't tend to be low. The good stuff in life tends to be things that are priced for that. So we're going to say, look, if it goes low, I'm going to try to get in. Second, if it doesn't go low, but then it doesn't go to that price, but takes out 180, we don't want to be someone that has a sour patch face of like, I couldn't buy the pullback. So we're now prepared on both sides. A, if we can get the pullback, buy at the 172.16 or less. If it doesn't pull back, buy at the 180. The 180, we're saying if it goes up to that price or higher, get us in. Think about how many times you're waiting for a pullback only to be left at the bus station. And you feel like you're just always a day late, dollar short. I don't want you to feel like that way. So this is taking both sides. Buy on the dip, buy on the rip. It's not buying both. It's either buying on the dip or buying on the rip to the upside of price action. You need to practice this a couple times a week to get it down. Save the order. Target, we'll talk about. Stop underneath. Where's the stop? Now remember, if we buy at the 180, we're setting the stop underneath I'm going to set the stop initially under 165.87. Now I know you're thinking that's pretty low. That's true, but I'm kind of counting on that we might be filled at the lower entry price, 162.55. Okay, 162.55. Okay, stop. Now, target price. Now, calling all technicians. Let's go back and look at the last support levels, the last resistance levels. Well, the last level above that was 183. The other area above that was 199. Okay, now 183, if we buy at 180 and we sell at 183, that's not a lot of movement there. We got to think there could be a little bit more pump in that movement. If we said even the midsection of that kind of channel there, we're talking about 192. Now I'm going to kind of put a pie in the sky type of target. It might not be pie in the sky. I'm going to put, let's say 199. Okay. Put a little marker out there. Confirm and send. So here's the deal. You cannot say that you took this class and passed this class today unless you can do an at or below, at or above order. The at or below is at a moving average level. An at or, add 1 or 2%. The at or below is at a horizontal diagonal support, add 1 or 2%. That's what that is. The at or above could be at a hold level on the chart. It could be 1 or 2% above that resistance line. That's how we're coming to the same practice over and over again. Let me repeat that. How do I know where to set the at or above? Define the resistance, add 1 or 2%. Or what would the stock need to go up to become a hold? And doing the same thing over and over and over again. Okay? Not that complicated, but just how do we come to the numbers? Okay? Now, this is saying if we buy at this price or this price, then we have a stop at that level. And it's saying sell at that price or less. Okay? Now, yeah. So we're going to kind of call that order buy the dip or the rip in the price. Now, let's kind of go around and just kind of take a look at some things that are moving, okay? Just real quick. One of them is that we're kind of getting a little pump. Speaking of pump, we're seeing on semiconductor, your classic, you could actually say on this one, you had like a W pattern there, 1 touch, 2 touch, right? Middle of the W, probably somewhere for the most part, right around 62, ripping to the upside. Nice move actually on the on. Now remember, semiconductor. That's probably not the only one. AMD, doink. We're actually seeing when are the earnings? It's on the 5th. Now, when you look at a stock like AMD, what's the significance on AMD? Answer, well, you got a big, wide channel. Big one, okay? The bottom of that is 194, and the top of that is 259. Why is that significant? Well, it becomes a measurement for a target. The wider the channel, the bigger the forecasted move, okay? Now, I'm not going to spend a ton of time on this, but I am going to go into this for just a second. And now, by the way, I'm going to go back to Oracle for just a second. If you said, hey, James, I don't want to do the stock move. I want to sell those pets. Well, if we sold those puts, and I'll come back to AMD in just a second. Let me do this in a different way, but we can do it fast. If we said I want to sell those pets on Oracle with about, let's say, a delta 30 to 40, the 165, that's the one in the bottom of the range, okay? Now, if I did that, sell, and what I'm going to do in that case, I'm going to piggyback on that. Now, James, do people in real life try to buy the shares and sell the puts at the same time? They look, you can overlay different strategies that have different characteristics to the trade. We're going to buy the 140. How did you pick the 140? Well, because we actually normally are picking the strike that has a delta of 10 or less. Why? Low, you got to pay less for. Why does that matter? It widens, it actually makes the strike, it makes the credit higher. Bigger credit, lower break even. We're only buying the 140 for really downside protection, okay? Now, what I'm going to do in this case, go confirm and send. Note that. So we call this a short wide vertical, okay? It's not your classic vertical, maybe a $255, $10 wide. It is buying a put below, so it is technically a vertical. This strategy is really it's more synonymous with a cash secured put with downside protection, okay? Now, when we do that, notice that commission there, $1.30, it's 65 cents more because we're buying the put. Send the order. Now, let's go back to AMD for just a second if we can. Now, if we said on that AMD, wonder if we thought that stock might get a little push to the upside. Let's go back to this drop down. Let's go look at volume open interest just real quick. Is there any strikes that are on the puts that are standing out here? Anything? Any? We've taught you better than this today, haven't we? Well, number one is the first one that stands out quite a bit is this one, 848 contracts so far in the first 43 minutes of the market. That's higher than the open interest. Got some activity on this. On the other ones so far, this is 10%, that's 5%, that's 10%, that's 10% of the open interest, just eyeballing. Now, you want to watch that. If you start to see more and more strikes that have a higher and higher percentage of the open interest, you have other people or traders that are starting to see the movement and they're dog piling in. Now, I'm going to sell in this case where we're seeing more activity. In that case, the 260. And what I'm going to do is I'm going to buy a strike below that last trade here, sell the 260. And then what we're going to do is buy which one? Let's go to the delta column, bring it up. Which one has a delta 10 or less? The first one being the 210. Okay. And remember, that's just downside protection. We're not counting on that that's ever going to become worth something. We want to know that there's a floor to this trade. Okay. So when we look at this and say, okay, that's a last trade. AMD, we could say cash secured put, but you could really say it's a short wide put vertical. Second, when we actually go back to this, other trades that were done here today. Oracle, buying the shares of Oracle, okay? Second, third, selling the puts of Oracle. And then also when that is other ones, I just want to double check, Cisco as well. So what is that? 4 trades, okay? Focus a little bit more on the tech space, that's true. But some of the movements we've been seeing, that's where there's been relative strength. I think if this week we actually get the close where we, like say today's Friday, we close here, more traders, intermediate investors, long-term, might be coming in to add to the positions or the portfolio based upon what they're seeing on the weekly chart. So I think that's something to continue to watch. Now, I'll teach later today on trend trading. I want to thank Barbara Armstrong for answering those questions in chat. She is also teaching. Okay. She'll be teaching also tomorrow on trading a smaller account. I'll be teaching. Kevin's actually gone to Boston, so I'll be teaching solo ETFs tomorrow. And then Barbara will be teaching tomorrow. So you got some Barbara and James action here. Stay tuned for our next webcast coming up at the top of the hour. And thank you so much for your comments and your participation. Remember that with what we discussed, it was done for example, illustrative purposes only. Remember that all investing involves risk. Today, we really kind of focused on volume, not just stock volume. Talked about the comparison, but look at the option volume, the volume compared to the open interest. Watch that, because that could be leading to more speculation on price movement. Something to watch, and it's noticeable. With that said, thank you so much. Take care. Bye-bye.